So today we're doing a AM session market review. We're going to do the bias coming into the morning, tape reading stuff, going through from the private group, kind of going through those predictions chat there, and then the trade executions that I took both on demo and outside of demo for you to maybe look at and study if you want to. But overall, pretty good price action today, I would say. I feel like most people could maybe agree. Maybe there's a little bit of chop going on in the AM session, but for the most part, I think of this to be absolute textbook PA. All right, so we'll go through the bias, like I said, go through kind of out of market or outside of the chart stuff, and then going into inside the chart stuff. So before we even look at the charts, let's kind of figure out what we can deduce from economic calendar and price action coming into the morning, right? This is something that I do probably subconsciously, but it's also good because then when I before I go to sleep on Monday, I kind of know what I'm looking for on Tuesday. And then if Tuesday brings about decent price action coming into the session, I kind of know whether or not it's something that I want to engage in or not. All right. So in the weekly outlook and also in yesterday's stream, but more importantly, the weekly outlook, obviously we have a ton of news this week, right? We have NFP on Friday. We have Wednesday FOMC. So, and a bunch of other news drivers all spread out throughout the week. So having a good plan is one of the most important things, obviously, in general to have, but especially in this kind of a week to understand what we're likely to see and not to get caught up in bad moves. All right. So NFP protocol, obviously, we're kind of looking for, let me pull up the economic calendar here. We're kind of looking for what days are going to be high probability. Obviously, let me go back to Monday. Nope. How do I go to? Here we go. Screenshot this. Put it up right here. NFP protocol right here. So I'm going to quickly go through this. Most of you probably already know this, but Monday through Wednesday AM, this is normally like a good area. Wednesday PM through Friday 8:30, this is kind of your no-go zone, and then Friday after 8:30 is kind of your last ditch, I guess, for the week. So most of my focus is drawn to these 2 days here, especially the fact that we had FOMC on Wednesday. I don't really want to be trading tomorrow or Thursday, maybe not even Friday, and most of my attention, like I said, on Sunday draws to Monday and Tuesday, and then Friday after the fact. And normally for NFP week, this is a tier 1 news release, meaning if we want to, if I'm the banks, if I'm whatever you want to say drives price, but if I'm the banks and I want there to be sufficient liquidity for a tier 1 news event like this, we are going to build sentiment earlier in the week, right? Make it look like as soon as Monday opens up, oh, here's this energetic move coming in. So then on Friday, people are already in the markets, already have your stops placed, and then Friday it just whipsaws back and forth and people get chopped up, right? And normally you'll see this throughout any NFP week, that Monday and Tuesday normally have a larger range of price action. Monday or Tuesday, you want to see this larger range that's building in sentiment for Friday to make its move. Okay, so outside of the charts, not even looking at what the higher time frame is, this is kind of our expectations for the week, or my expectation at least for the week, is that Monday, Tuesday, we're going to see probably a larger range move. I want to be focusing on taking a trade on either of those days or both, and then try and be done up until Friday, right? So this is kind of the expectation coming into the week, and you don't need the charts for that, and this is obviously posted going into it. So as we saw in yesterday's price action, kind of this consolidation within the new week opening gap. So we don't have the large range expansion that we saw on Monday. I had taken a loss, and you can go back in and see that in the market review, or not the market review, the tape reading stream that we had yesterday, a very tiny one. And then today, a nice win coming back down inside the range. So Monday doesn't create that move. Tuesday's likely to. We also know that since it's NFP week of August, we're likely to see a seek and destroy profile for the week. So we're looking for probably not a range expansion, but more of a internal return back to new week opening gap, running internal stops back and forth, back and forth, back and forth, Monday through Friday. Right? All of this is the logic and is going to help us frame any sort of bias coming into the session and assist in what our higher time frame is telling us. So all of this together is starting to build the narrative, right? Build kind of the bias, build the narrative coming into the charts, and then you look at the higher time frame, it starts to make a little bit more sense. And probably why maybe we're not looking for, or I wasn't looking for longs today and looking for shorts back inside of the range. So let's start on the 4-hour chart here. This is probably where some people got tripped up. My eyes immediately just draw to this range. This is the most relevant range coming into Friday, or sorry, coming into Tuesday today. If you're looking at this with a very lazy approach and you're not accustomed to the conditions we've been in for the past couple of weeks and months, you're not accustomed to the consolidation profiles we've been seeing, this is going to be for someone who's probably looking at this as, oh, it's blatantly obviously we had a SISD, fair value gap, we're going to see an expansion continuing up. I don't think that's a bad bias. I just think that it's, given the circumstances that we're in, it's a little bit too quick to come to that assumption without going to the lower timeframes and studying to see, do we have added confirmation to make sure that we're now looking for a range expansion outside of this, right? And like I said, given all the other stuff I said earlier, I'm probably looking for more of a consolidation profile and a return back into the middle of the range. And we know that for any given range, the week, the day, and the session, we have very specific dynamic drawn liquidities for these ranges that are likely to consolidate. So for the week, our dynamic drawn liquidity becomes the new week opening gap. For the day, it becomes the midnight opening price. For the session, it becomes the 9:30 open. So when one of these or all of them are expected to consolidate, these become our dynamic drawn liquidity pools. So for the week, if we're expected to consolidate, new week opening gap becomes our dynamic draw. But on the 4-hour, obviously dropping into the new week opening gap there, you can see this large volume bounce trades into it, starts to climb back up. Do we have any displacement now through this swing high? Not really. Coming into 9 a.m., we had obviously this run up. We have a tiny fair value gap there forming, but not a lot of added displacement. And if you go on the 1-hour chart, you can kind of see the same thing going on in here. We have one gap formed up here on the top of this range. A lot of low resistance sell-side liquidity forming in here. And when you're looking at it, is it respecting bullish PD arrays? Does this kind of meet the qualifications to be a weekly low? When you look at it, obviously lack of displacement in here. We have a gap in here, which works. But then when you look at ES and YM, you have obvious SMT with the Monday high right up in here. So it's not, if it were to be bullish week, you'd expect this to be SMT at the bottom. And now ES and YM are both printing up in here. And you can look at YM. You see the same thing going on. So this to me, added with the fact that we have bias of return to new week opening gap, SMT now at the highs with Monday, previous daily high. And now low resistance in here on the 15-minute chart as well. And here, this consolidation forming, right? Obviously, you can look at this. This is all within this balanced price range. We're not really looking at this to be inefficient. But my eyes go to here, this consolidation range. Consolidation, consolidation, consolidation. Then it gaps up, takes out the previous daily high. The SMT is forming. And then going into 9:30, we have an energetic run up. So my bias coming to the morning was bearish. Coming into it, I was expecting lower prices, not probably this low. I wasn't looking for PM session low, but lower prices coming back into the Asian session low. And if I pull this up, or if you're in the private group, please pull up the predictions chat, and I want you to go through this as we go through the lower time frames. I want you to read through every single post as I'm mentioning this, if you can. But I'm going to do that as well for this trade. But I'll screenshot this really quickly, and then we can go into the lower time frames. So bearish bias, looking at it today. MMM, yeah, I did take a trade today. Very nice one today. But here's what I put in the predictions chat in the morning. 10 a.m. news today. So using my personal protocol for hunting setups, and that protocol would be preferably waiting for silver bullet. This is the protocol that I teach for 10 a.m. news days, is you want to be focusing majority of your attention onto after the 10 a.m. news. Now, if you're more seasoned, if you know what you're looking for, you don't have to follow that. But for people who are new, and obviously that's what the private group is for, probably for the newer intermediate students, that's what you want to be looking for. And on the demo here, that's the rules that I follow. My own live account, which I'll show you, I do not follow those rules. Instead, I got a bit of an earlier entry. But Asian low right here is my draw on liquidity, which is this blue line here. You can see this is the Asian low, so Asian session liquidity. You've got a lot of this original consolidation. So in my mind, visually looking at the 15-minute chart, London low is a target. I think Asian low, you can see all of this low resistance, sell side liquidity forming. I think that's a reasonable target. And for the apt student, 10 a.m. news days, you want to be looking for your Asian session liquidity pools, something that ICT has said personally. That being said, we come into the 5-minute charts. Just come over here. I'm not gonna, let's just go over here and work on the 5-minute. Those are my annotations. We'll go through those, don't worry. But 9:30 prints. And if you're bearish, what do you want to see right at 9:30, right? Nice manipulation, preferably forming SMT at the highs. In this case, 9:30 prints up, starts energetically displacing. This to me is perfect, right? We're building sentiment in for that logic of the NFP. We're at all-time highs, right? This would be at all-time highs. So everyone's looking along this, right? You see Monday formed a low, Tuesday's printing up, boom, 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 gapping up on the 1-minute chart, energetically coming up. To me, this is retail Rick heaven, right? Energetically going up into all-time highs. 9:30 is printing up perfectly with no meaningful manipulation or anything at London or anything like that. That to me is just sentiment building for both the day and the week. And I'm looking to short the hell out of that once it gives me at least one sort of confirmation, right? And preferably, like I said, with this, we'll be waiting for Silver Bullet to get kind of that move coming into it. The news that we had today, Jolt's job opening or whatever. This one right here. This Jolt's job openings. This is not a huge news driver, so something to be worried about. Instead, just use it as normal volatility and such. You know, just you can trade around it if you want to, but it's not going to be something that I'm going to be worried about. I'm going to get slipped or something like that. Okay. As you look at the 5-minute chart, let me refresh my page here because we're missing some data. There we go. As we look at the 5-minute chart, let me clear all this mess out. You can see energetically running back up. We're looking for textbook ATM model would be a confirmation of reversal. You have a gap here that's gapped through, right? So that'd be an IFVG. Boom. Now you have indication that the 5-minute chart and therefore the session is probably looking for a bearish move. You have a change in state of delivery here as well. You could be using that, right? And then eventually you have a market structure shift through the swing low, all of which is now showing that high the session is likely to have been put in. We can start to trust 1-minute PD rates are going to start to hold as we look for lower and lower prices. Okay. In this case, we have a 5-minute gap here. You can see it trading into during the macro time. And then you also have on the 1-minute chart a breaker. On the 5-minute chart, it's also here you have a breaker that is reusing as it wants to go back down. So SysD on the 5-minute, you know, it's, let me come back and re-annotate all these levels that I had. Give me a sec here. There we go. Now with the annotations of the 1-minute, you can kind of see what I'm looking for. I'm refining these as I go on, but this is the annotations that I had coming to the session. Short-term buy side ran out. That's going to be the SMT. If you look at the short-term time frame, 15-minute chart, you see the session SMT up here as well. Right, so that's indicating the session high has been put in, 5-minute displacement, etc. And then on the 1-minute, pretty not too bad. There's a bit of consolidation in here, but 10 a.m. news comes in. We get a gap plus the SysD plus the breaker, trades up into it during macro time, drops back down, reoffers a 5-minute volume balance, and then it just constantly starts to hold PD rays and sink lower and lower, eventually into the new week opening gap and the PM session low. I'm not going to go through each individual PD array here, but for those in the private group, I want you, like I said, to go through the predictions chat if you've not already, and read through everything that I'm saying in there, because that's like verbatim what I'm thinking. Like where I'm trimming my stop, all those sorts of things. But like I said, for that kind of 10 a.m. execution. I'm doing just a textbook 10 a.m. execution, so there's nothing fancy, and it's very easy to explain for those who are looking for repeatable, high-quality setups, okay? This is that move. You've got shorts as it's trading into this, waiting for the 10 a.m. news to come out, right? Shorted there, and then eventually on the 1 minute SISD, shorting it there, buying one back on the London low, buying one back on the Asian low, and then eventually buying one back right below that into the new day opening gap, which I usually don't use as a draw on liquidity, but today was pretty juicy, so I ended up putting it on there. And then eventually ran to the -2, -2.5, and then to the PM session low. But overall, you can see the time dynamics also playing in, right? 9:30 to 10 forming the high, 10:30 to 11 forming the low. Does continue into the rest of that AM session. And then obviously the macro time offering this very high quality setup back inside the range. This is a very easy scalp. Okay. I want you to look at this as something that is repeatable. And this is the kind of setup that you want to be finding once a week. I went pretty fast there through all the PD rays, but this is being recorded. So if you want to go back in and watch it, you can. But this is something that I would love to see if I was trying to figure out what's a model that I can repeat, and I only need one time a week, something that's textbook. This is what I'm looking for. Okay, as you progress, you'll be able to take it from the shorts from up here, right, with the first presentation gap being inverted. That's something that you could look for. And eventually, as you progress, you can be taking it to the -2, -2.5. And that's something you could look for, right? It's not required. I did that today on my live account. I'll pull up the screenshot once we're finished here. But that is something that obviously is still going to be offered as that one shot, one kill for the weekly profile. And then you don't have to trade for the rest of the week if you didn't want to, right? But this is a high quality day to be studying because of all the things that I've mentioned there before. There's logic that it's following. And this is the kind of day that I love to trade because it's following logic both beforehand, before the chart even prints, and obviously during the bias, and then in the lower time frame, what's going on that is repeatable. Sometimes 10:30 creates high of day and then fully reversed. Why is that? If the daily draw has been met, right? If the daily draw has been met right at 10:30, it'll reverse. But for the session, when we talk about 10:30 being a draw on time, that is specific for the session. So when I want the session to expand, 9:30 to 10 should form one end of the range, 10:30 to 11 should form the other, specifically for the New York session, right? For the day, it can be different. For the entire week, it can be different. But at a minimum, that's kind of the draw on time that I'm looking for. Okay. There's some other PD rays you can look at, like in this case, this kind of retracement. I want you to notice this retracement in here. We do take out that short-term low, fails to take out the London low, but then it comes up a little bit. This is probably going to stop someone out who is aggressively trimming their stop. And I want you to study this because it's coming back up into the 5-minute volume imbalance. Should come over here. There's a look at how this candle is printing. You're not going to see this if you're not looking for it, but the 10 a.m. news is creating this volume imbalance. But notice how the 9:55 5-minute candle closes right here, and then the 10 a.m. candle opens up right here. Right, these are both down closing candles, so it closes right here on the 9:55, and then it opens up here at 10 a.m. That is going to be a volume imbalance. It just looks weird because of the fact that normally you see that candle open up here, and the volume balance would be like that. But in this case, it's opening up a little bit higher up than you normally see it, and that creates the volume imbalance. So the reason that it's returning back up during this range is, what is it doing? Well, in this exact time, let's pull up the 15-minute gap here. Right? It's taking out a discount array in the form of that 15-minute gap. There's one below this, but also that short-term swing low. So what is it going to return back into? A short-term premium. And in this case, it's returned to the 5-minute because that's going to be the parent time frame. You have dealing range here. It's returning back up into the 5-minute volume balance as well as the order block. You have up closing. That entire thing is an order block. In its wake, though, as it's running, so we have a discount array here. It wants to return back to premium. This gap here this inefficiency that I have marked out in blue is a fair value gap, but in this case, it's in discount of that dealing range. So that does not mean it's going to be used as an inversion, but rather a reclaimed sibi. So originally it's going to be traded through, and someone who's looking at just PD arrays to use as PD arrays, you're going to think this is an inversion gap, and you're going to be looking to long it, not understanding, number one, the draw on liquidity is still lower. Number two, the draw on time is still further on into the day. And number three, we're just slightly returning back into premium here, and we're going to reuse this gap later on. So this is not an inversion gap. This is a reclaimed bisi, because first it's going to be traded through, meet the premium array, the higher time frame draw. And then when it's done with that, then when it trades back through this, you can see how many times is being reused there, right? 1, 2, 3, 4, runs and stops. Then it comes back down, trades back up into it perfectly there. Inside the sibi as well, or fair value gap. And then it drops back down, forms what? Mitigation block on the 5 minute or the 3 minute, either way. Let's look at the 3 minute here. Got a mitigation. The 1 minute you can see it a little bit clearer, right? Mitigation block. What plus a 3 minute fair value gap is also a 1 minute and a 2 minute fair value gap. Inside of what? The -1 to -1.5. What is this? I'm looking for the answer in chat. What is this -1 to -1.5? And what is this model right in here with the mitigation plus fair value gap plus the macro time? Silver bullet, right on the dot. So I want you to know as well to study this -1, -1.5, macro time, mitigation, fair value gap. This is what? This is exactly what we're looking for on a 10 a.m. news day. If you miss this one, if you miss this one, if you miss any of these run-on stops, etc., maybe you missed this one, this is the entry I want to get at a late, very, very latest, right? 10, 11 o'clock. So you can see how creating self protocols where there's this news going on, or there's this economic whatever going on, and then having a protocol that you personally follow, a lot of times will save you. You know, if you know what you're looking for, you may not have to follow those protocols, but as kind of a textbook way to find good entries, there'll be specific things that are more common than others, right? Yeah, last ditch macro, exactly. So you got a macro time, silver bullet time, all these are the PD arrays, and then it goes right to the -2, -2.5, and then eventually right to the PM session low, where it creates the low of the current day. I don't know if that's going to be the low of the day completely, but low of the current day, right? I'm going to pull up my personal execution, and you can see this, but this is something that if you're looking forward to souping, or if you're looking for kind of what can you do with all this kind of knowledge and putting it into use after year, what can you able to do with it? This is my personal execution here. See if I can get all of it in. I'm gonna go through it here. This is my own short. So shorting it here at the I don't know, it was 9:43, something up here. Basically, this 1 minute SysD became my entry. So shorting it there at 9:40 or 9:41, I think 9:40, getting majority of my position in there, building another one in as it retraces into the first presentation gap, buying it below the minor sell side, pyramiding in as it's retracing all in here, buying it back again as it tags the London low there, right there, then buying more back as it tags the Asian low there, and then my last runner was set to the -2 to -2.5. There's a tiny 1 hour gap placed basically at consequent encroachment of the new week opening gap, and that becomes my last limit order there. I missed, obviously, the rest of this going to the low of the session. I'm not going to be greedy about that, but in this case, this is basically a high of the session to low of the session, or potentially high of the session to low of the day kind of trade. And it ended up being personally about 13R. So this is more than what I need for the week, but this is my entire weekly goal in one trade. And this is exactly what I'm looking for. So now I don't have to trade. I wasn't going to look to trade Wednesday, Thursday, but now I don't have to trade Friday if I don't need to. But this is obviously something that you can shoot for. It's not something that you can do within one day. This is after 4 years of studying ICT total and probably a good 2 years of studying this specific model until I'm able to get pretty confident in my own execution and my own bias. But you show this to a retail guy, selling the highs, buying almost each individual low as it forms, is something straight out of a magic book, And all of this pyramiding, by the way, these are not just me selling it randomly. This is very strategic pyramiding. So most of my contracts are building in there, right? Tiny portion in there, and then partial off of there. And then each of these limit orders, you can't really see it, but it goes -5 first, -3, -2, -1. You can't really see it in here, but there's a -1 right there. So as I'm pyramiding, all of these pyramids are like we look for. It's kind of an inverse pyramid, I guess. But majority of my contracts are up there, and then siphoning it down to the smallest possible position would be -1. And also, while I'm pyramiding in, we know that the DCA is going to go lower and lower and lower and lower. So the only times that I'm pyramiding in is number one, when it's a good entry. Number two, when my bias is still correct and it's a good trade. I want to be adding to my winners. And then number three, when I can effectively and reasonably trim my stop. I do not want to be pyramiding in just because I can. I want to be pyramiding in because of the fact that I can trim my stop. And now my stop in this case never went above my original risk. So when I got in here, my stop was up at this swing high, and it never went above that original risk. So all of these pyramids, as I'm trimming my stop and putting it into profit and putting it to break even, was never above that. So it netted around a 12 or 13R, I think, total from entry to full pull exit. But anyways, enough execution talk. I don't like showing that enough, a whole lot. But this is something that you want to be looking for on any NFP week, is obviously this Monday or Tuesday large range trade. And then, you go back and you look at my little loss on Monday. I'm going to go back in and look at this. By the way, this is also the trade that we took on the demo here. It was only a 3 contract limit because of the fact that we took a loss yesterday with 5 contracts. So dropping the risk, obviously, as encouraged with risk management. And you can see the kind of loss I took in here on stream yesterday. Makes it a whole lot easier to take a loss, right? When you look at it like this okay, you take a loss, may have been a good trade, it may have went to take profit, it may have stopped you out, whatever. Trading, I want to be a winning trader and not to win trades, right? I want to be doing the things that every single day prove to myself I know what I'm doing, right? When I take a loss, it's whatever. When I take a win, it's whatever. This was personally one of my best trades I think I've taken in the past couple of months, but you could be happy about it. I bought myself a coffee for it. It is what it is. It's just work, right? This is your job, is to execute, to manage your risk. Yesterday, I got slipped. I got slipped for about my original risk plus about 50%. So I got slipped yesterday for about 150% of my original risk. Meaning, like, if my risk was at $1,000, that math would be I got slipped for 1,500. It's part of the game, unfortunately. It's annoying, especially when I look at that. I'm like, okay, that's kind of annoying. Like, you get slipped, you can't really do much about it. You can blame it on the top step, you can blame it on the trading view, you can blame it on the market, whatever. It's not going to do anything. My job still is the same. I journal. Okay, I got slipped. My risk, I got to still drop my risk to if I had taken a loss and then another loss after that. I can't just say, oh, because I got slipped, it's not my fault. I'm going to try and go in with the same size today and get it back. Instead, you drop your risk and you go in with the mindset of, I'm going to take a really good trade. And if it happens to be a good trade, it will give me my slippage plus profits, right? If I don't manage my risk and I take a loss, I'm going to dig myself a further grave. And we don't want that. Every single problem, that you may have when getting out of drawdown or dealing with drawdown can be solved by 2 things: managing your risk, taking good trades. That's all it comes down to. As soon as you start worrying about the money, as soon as you start worrying about how long it's going to take to get out of drawdown, you're not focused on the one job that you have, which is to become and to be a trader. Okay. Your job is those two things, and that's it. So as much as you can focus on the task today, sometimes it nets you a win, sometimes it nets you a loss, right? And it's a random kind of event where it's random outcomes, but over the course of a long period of trades, you will see kind of the law of large numbers play out, and that's what we want. Okay. Definitely a lot of things to learn from today's technically, right? From the bias down to the lower time frame charts. I really, even in hindsight, I really don't think that the Monday low was something that I would have been shooting for, even for my partials and runners. And for the fib projection here, I took it at this leg, this little wick up to this high, just because of the fact I didn't know how far it was going to go. In hindsight, and something that's probably a bit more reasonable would be this, or potentially this. All of which is giving a little bit further targets, which I didn't really like personally, so that's why I trimmed it a little bit further down. But now you can see, you take it from the real last manipulation leg, that puts you perfectly down to the -2, -2.5, and eventually the PM session low, right? Also study the stop trimming techniques that I posted in the predictions chat with stop trim to here, and then to here, and then to here, and eventually back into the order block. That is something that if you're struggling on, the logic behind that is the same. It's going to be an intermediate trim high or low formed. And this is kind of the most textbook way to trim your stop, is to look at this kind of fractal market maker models to be printing. So if I'm looking for shorts, the easiest way to trim my stop, and I suggest for you to be trimming your stop in demo, is every single time we form this fractal market maker saw model. So if I'm getting in here, as soon as it takes out this low, you can maybe trim it from here to here, or from here to here, right? And then when it starts to come back up, do not trim your stop immediately after it does this, because if I trim my stop to here and it wants to give me one little run back up and then it comes back down, I'm going to get stopped out prematurely. Wait until this entire thing is finished and it's ran out there, and then you can take your stop from here to move it there. And then the same exact thing. So wait until that swing low is purged, and then you can know, okay, that's a fractal order block and market maker model. Therefore, it should be respected on the way down, because we know that all of these fractal market maker models would just be order blocks on a higher time frame. But now you can see in here, trades up into the fair value gap plus SD, drops back down, takes out that low. You can trim your stop from here to there. Then this one, boom, takes out that low from there to there, and then to there once that low is taken out, and then fractally there. Boom. Then here, right? So you can see, obviously these are intermediate term highs, but it meets the qualifications for what you want to be looking for within stop trimming techniques. How did I mark out the VI? So there's two ways. I marked it out from the 5-minute chart, which is going to be the one that I rely on more. But basically, the closure here at 9:55 and the open here at 10 a.m. Think of this kind of like a new week opening gap, right? When you see this on a higher time frame scale, it's very hard visually to see this sometimes, but notice how the closure on this candle is down here, and then it opens up here. So it goes close, it goes open, high, low, close, then it goes boom. That shouldn't be there, right? So that entire thing becomes a volume imbalance. On the 1-minute chart, you could also mark it out, but you can see here at 9:59, there's the open, right? Sorry, the close, and then at 10 o'clock, there's the open right there. So same exact thing you see on the 1-minute chart is just also on the 5-minute. Doesn't matter which one you marked it out from, it's still going to give you the same answer. Make sense? You take a trade last Wednesday. If yes, can you show fast in hindsight? Yeah, let me take a look. Last Wednesday. Come over here. Thursday, Wednesday. Session. I don't think I did. Or I may have taken a loss. I don't believe I had. Wednesday. Let me take a look in the stream trades to see if I did or not. I don't think I was streaming though on Wednesday. What is the date today? 23rd. Yeah, I got no executions from the 23rd. I got one from the 24th. And then let me check my But I don't think I would have. I mean, if you look in the 15-minute chart. Yeah. So I think I may have sat it out on Wednesday. Let me see if in the predictions chat if I'd said anything. 23rd, 24th, 22nd. Yeah, I literally have nothing. If you look at the screen chat earlier, there's a whole gap in my predictions chat. You got the 22nd there, 9:49, and then 24th at 9:47. So I didn't even look at that day. I think I just completely just slept through it. So nothing there. And it just in hindsight, if you want to look at it, it looks like a swing to Z day. Not really though, right? It's just kind of a weird new week opening gap, new week open reversal. No, new week opening reversal, New York open reversal. But this is, I mean, that's a mess. Comes back down and then slow grinds back up. And yeah, this is a day I'd like to avoid if possible. And I did. So probably something pre-market that I saw that I didn't like. Yeah, probably there on the 1 hour chart coming into it. Got low resistance on both sides. And we're 50% of the dealing range between here and here. That's not really good for any sort of bias, right? We ran out the external range from Friday, came back up into the range, and we're consolidating inside of a larger gap. If anything, I'd be bearish, but it's very hard with this consolidation week and the fact that new week opening gap is printing there. And we're at 50% of that implied dealing range. Or sorry, the dealing range, not implied dealing range, but dealing range. So Chop City expected, and that's probably why I sat out. If you want the logic as to why I decided not to trade that day. But yeah, not too much more I want to go through. Just kind of a market review. And some added stuff, obviously, with the execution and tips and tricks there. But, you know, takeaways, I guess, from today is number one, the bias. So if you had an incorrect bias, study as to why. I don't think it's unreasonable to instantly look for longs. I just think it's not as diligent as it should be. I think the longs today is probably the no, you know, if I gun to my head, what would I pick? Just looking at one chart on the 4 hour, the 1 hour, it may look like bullish. But you need to understand the conditions and environment that we're in, number one, and then number two, obviously the lower time frame, so the 4 hour, then the 1 hour, then the 15. Go through it diligently, look for SMT, and make sure that, okay, I can 100% argue bullish price action instead of price action like this, where it's coming back inside of the range. Right. What's the baseline setup for silver bullet? Did you say? Yeah, mitigation plus fair value gap, plus preferably the -1 to -1.5 of the dealing range, right up in here. You could use this one, you could use this one, either one. You still have a mitigation plus fair value gap, but I like this a little bit better. So yeah, mitigation, fair value gap, -1 to -1.5, and then silver bullet time. That equals your silver bullet. Silver bullet. All right, so something to look for. It's not there every day that you see all this. The silver bullet trade will be there every day, but not all of these beautiful requirements are going to be met in a clear manner. Silver bullet trade will be there. You know, the fair value have to be traded into between 10 o'clock and 11 o'clock. That'll be there every day. But it doing something perfect like this is the kind of silver bullet trade that I want. It's not going to give me that every time, you know? But yeah, we'll probably do if you got any questions, you can put them up in the chat. Yeah, you can look for, I mean, turtle soup during silver bullet, you can look for continuation ones like this one, but you need to make sure that drawn liquidity is not met. Otherwise, you're going to get caught with a late move and you're going to end up getting stopped pretty quickly compared to this is something that I'd be studying a little more, right? This kind of manipulation like right up in there. So London close can reverse if drawn liquidity was met at 9:30 didn't meaningful manipulate. Right. I mean, it's not a requirement that the 9:30 part But yeah, if London close can reverse if the drawn liquidity was met. For, in this case, it'd be for the day, right? Normally, you don't see that. Normally, it's either continues through London close or it consolidates around there. What the heck is going on with the time? What the heck was that? Anyone else's trading view been acting up weirdly? Like it'll either cut out data or have weird things. I don't know. Mine's been kind of freaking out the past couple of weeks. I have to like and if that happens to you, by the way, if you see like for me, for example, this morning, I was completely just missing the 931 candle for whatever reason. If that ever happens, refresh your chart. Okay, save and reload and refresh your chart, and it'll work. If you're in your demo account, trading view, and your limits aren't like actually being placed, they're still working and they're not actually being placed or being filled, go back into your paper trading, log out, log back in, refresh the chart if you want to, and it should be working by then. All right. Anyways, so I'm gonna wrap it up there. Hopefully, you learned something from today. We'll do a psych stream later this week, either later today or later this week. So if you got any psych stuff that you're struggling with and want some help with, or even just to talk about it, we'll do that sometime. We did the psych stream last, I don't know, Friday or Saturday. If you haven't seen that, you can go into the YouTube vids section and find that there. It's called Pre-Session Warm-Up and Psychology Stream. I'm going to link that over here if you want to watch it. But something that if you're struggling coming to pre-market is a very good checklist. You want to warm up just like every other professional athlete. We are professional mental athletes and technical athletes. 90% of the population cannot do what we're doing. So we need to treat our bodies and our minds with the utmost respect and play like we're playing a professional sport, because we are. So having a good pre-session warm-up routine, both for the mind and maybe for the body as well, is very important, I think, in finding discipline and success over the long term compared to just waking up and feeling it, versus some days you're not feeling it. You don't want to be trading that day, right? If you go through your market routine, your pre-workout routine with full honesty, I think it's easier to catch when you're not actually feeling it, or you want to be trading for the P&L instead of for the trade and doing what you need to be doing, right? So check that out if you haven't. Make sure you journal if you haven't already. I haven't yet, so I'm going to go in and journal for today's price action. And then obviously, if you got any questions, reach out to me. I got a bunch of DMs I got to answer. And then, yeah, psych stream either tomorrow, today, or Thursday. And then for the private group guys, stream on Friday. All right. So take care. Do the things that are necessary to succeed. And I'll catch you guys soon. Joined in late. I know you already explained your edge. Oh, strategy and point of entry. I can't really do it quickly. We'll do it next stream though. Okay, I promise. But yeah, it's I don't really have a strict entry model. I've got like 4 different entry techniques. It's more of just, I don't know how to describe it. I'll have to write it down for you. Anyways, but yeah, take care. Take it easy. And I'll talk to you guys soon. Peace.